Rentvesting to get into the property market sooner. It's a really good solution if you're priced out of a market. As soon as you have the mindset that you're going to Rentvest, right, you straight away open up a massive amount of opportunity to investing nationwide. And obviously over time, you've got that rental income that's increasing, creating that passive income, and it's going to pay you money in the pocket in the future while you're getting the capital growth. I love the Rentvesting strategy personally. While I'm allowed to, I will continue to purchase investment properties, build that wealth base, getting those areas primed for growth and that snowballing effect. And then down the track, some of that passive income that we create will help pay for that owner-occupied property when the time does come. We are live with another episode of the Tailored Property Wealth Podcast. My name is Casey Taylor. I'm the host of the podcast. And in today's episode, we're talking about rentvesting to get into the property market sooner. This is a strategy that is becoming a lot more common this day and age, and it's a really good solution if you're priced out of a market. And this is a good solution if you are priced out of the marketplace where you might reside. I've managed to build a multi-million-dollar property portfolio in just a few short years, and I want to inspire and motivate other Australians that if I can do it, so can you. The Tailored Property Wealth Podcast has been created to help educate, mentor, coach, and support you through everything relating to property investing to make sure you go out there and make a much better educated decision when investing in property. Please like, share, subscribe, and share this podcast with anyone who you think might see value in it. Now, just to kind of chat a little bit about that, a lot of the time at the moment, or just in mainstream media, whatever else, there is this narrative that people are never going to get into the property market. I get people commenting on my stuff all the time, and it's like, we're never going to be able to purchase, blah, 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 blah. The reality of it is that that's a victim mindset. I know that's harsh, but that naturally just, it is what it is. There are solutions out there for you to purchase and get into the property market, and it just might not mean that you're going to go out there and buy your dream home straight away. But if this is what you need to do to get in the marketplace, get that growth and start to build your wealth base, that's what you need to do. You might not want to hold an investment property for your whole life, but if you purchase now, you might be able to then use that to get into your own occupied property down the track. Okay, so we'll get into it and how rentvesting can help you get into the property market sooner. So as soon as you have the mindset that you're going to rentvest, right, you're not then tied down to just the area that you're currently living. You straight away open up a massive amount of opportunity to investing nationwide and targeting, I guess, specifics of your strategy that you want to implement, but just naturally getting something that's within your budget, right? I'm in Newcastle. Property prices are extremely high, and what I did 2020, my income was a lot lower than it is now. I couldn't afford to purchase here in Newcastle. Prices were still expensive back then in comparison to my income. So what I did was I went out there, I got pre-approval, and I found a solution in my budget that was to get into the Brisbane property market, and prices are were a lot lower then than they are now. But that one allowed me to get into the market where I wouldn't have been able to do that in Newcastle. But it also allowed me to get stronger yields as well. So because of that, that helped from a serviceability point of view and me being able to make repayments on that property. And then I was able to get in, I was able to start getting that capital growth, and that capital growth then got me into another property and another property. Versus if I had the mindset where I had to continue to save just to get into Newcastle, I'd probably still be trying to save for it, right? So it just gives you options, gives you a lot more options in your budget. And yes, you're going to have to pay stamp duty. You're going to potentially, well, you will if you're a first home buyer, you're going to forfeit your first home buyer, I guess, incentives. But if you're thinking long term, it's far better if you can start to get the growth side of things. It doesn't make sense to sit there for another 3 years just to get some incentives when over 3 years you could have made 200K in capital growth, right? Equity that you can then go out and use for further purchases. Now, the next one, and I want to touch on this a little bit more, is those strong yields. Okay. In an area where price points are high, naturally the yield's going to be a lot lower. Sydney, Melbourne, Newcastle yields are a lot lower than if you look at your Brisbane, if you look at your Perth and Adelaide. So you can strategically go out there and not sacrifice on going regional, but you're still getting a strong yield in a metro location between 5 and 6% roughly. They are starting to drop, and that's just where prices are going. But you can target those areas with stronger yields. And what that means is in an 18, 24-month period, factoring in that rates are going to drop a little bit and then we're going to get rental income growth, those properties that are costing you money now won't be costing you money in 18 to 24 months' time. So that property is now neutrally geared, potentially a little bit positively geared, and it's just so much easier to hold that long term. But when you got the capital growth in conjunction with that, now you got your savings buffers in place, you're saving money, that's not costing you anything, and you can go into another property sooner. So it's just that domino effect, okay? Thank you for listening to this episode of the Tailored Property Wealth Podcast. I hope you're learning lots and getting lots of value out of this episode. If you want to discuss the opportunity of working with us here at Tailored Property Wealth, jump across to the website www.tailoredpropertywealth.com.au, complete the contact form, let us know that you're listening to the Tailored Property Wealth Podcast, and let's reach out, let's have a chat and see how we can help you execute on your property goals. That area prime for growth, we spoke about this on the last episode and the different factors to look at. But as soon as you look nationwide as well, not only from just a benefit from a budget point of view, getting those areas that are prime for growth, whereas the area you might be living in might have gone on its growth run and it's going to sit flat for a period of time, or you might be working in a mining town and it's super high risk to invest in there, or that the market you're in just simply isn't a good performer. So taking that nationwide approach, getting those areas prime for growth, you're going to get that above average capital growth where it might not have been the same if you were just to purchase a property where you reside. So that one's super important, right? Just really going out there and maximizing the potential, increasing your opportunity, getting that capital growth, which is just going to go into further and further purchases. The next one is that it gives you tax deductions where you wouldn't if you were to purchase locally. And we are conditioned in a way as a society that we go to school, we learn this regimented way, we get out of school, we go to uni, we go out there and get a personal loan for a car, and then we get a mortgage and we pay that off over 30, 40 years, whatever it is. That's just a condition for us to go out there and work in the economy and blah, blah, blah. Story for another day. So a lot of people can't grasp the idea of going out there and purchasing an investment property. However, an owner-occupied property doesn't generate rental income for you. It is a liability. People will say it's not. It is a liability. It's not putting money in your pocket, and it's costing you every single month in terms of interest, repairs, blah, blah, blah. And none of those expenses can be claimed as a tax deduction because it's not generating income. Speak to your accountant, make sure I'm not lying. Versus if it's a rental property, an investment property is generating rental income, you're now able to claim the interest, the expenses, all of that. Speak to your accountant again. But because of that, it can actually help with servicing and also help mitigate and reduce your tax as well. The simplest way to think about this, and again, speak to your accountant about this, if you're on an income of $60,000, you've got $20,000 worth of rental income, your income's now 80,000, and then what happens is if there's $30,000 worth of expenses, that comes off that total amount. So you got 50K, and that's what you'd pay tax on. Speak to an accountant though. But there is benefits from that tax perspective. If you've then potentially got a business like I do, for example, I'm able to make some claims on that because of working from home, studio setup, blah, blah, blah. So there can be benefits depending upon your situation also, but it allows you to claim a lot of things that you wouldn't be able to on your owner-occupied property. And obviously over time, you've got that rental income that's increasing, creating that passive income, and it's going to pay you money in the pocket in the future while you're getting the capital growth. What people don't understand with owner-occupied property, owner-occupied debt as well, is because you can't claim those expenses, yes, that property is going to increase in value over time. But if you, when you're signing your loan documents, you see the amount of interest that you're going to pay in addition to your $500,000 mortgage, the difference between the capital growth you get over time and the interest you paid isn't going to be that much in the reality of it, versus going out there, getting that area primed for growth and being able to claim some of those expenses on the property. So it's just a couple of things to definitely consider. I love the rent vesting strategy personally. While I'm allowed to, I will continue to purchase investment properties, build that wealth base, get in those areas primed for growth and that snowballing effect. And then down the track, some of that passive income that we create will help pay for that owner-occupied property when the time does come. The affordability piece as well is a crucial one of your cash flow renting in an area versus holding a mortgage. And the prime example of this one is where I reside right now, and there's different marketplaces around Australia doing the same thing or a little bit differently. The property I live in right now sold in December 2023 for 1.5 mil. So if, for example, I was to purchase that property myself, do an 80% lend on that property, the mortgage repayments would be far more significant on this property versus me renting the property here for $800 a week. It's about $34,000 better off just paying rental income versus a mortgage on this property. So just from a pure cash flow point of view, I'm $34,000 better off, but then there's tax advantages to that as well, right? So that's something to consider. Is the area that I live in, is it cheaper to rent here and pay rental income per week versus holding a mortgage to get into the property market here? And people love this one. Oh, but you're paying someone else's mortgage off and blah, blah, blah. The moment you go out there and you purchase an investment property somewhere else, you are now building your wealth base despite paying rent each week. And you're just shifting to be able to claim expenses on that debt elsewhere. So as long as you're not taking action, right? If you're renting for your life, right? You're not going to build wealth. But as soon as you go out there and you're purchasing properties elsewhere, you're rent vesting, you're putting your money to work in other areas and you're just paying to live where you want to live. And in the higher end of a lot of markets, it's just simply far cheaper to rent versus pay a mortgage. So it just makes sense for a lot of people, and a lot of high income earners, that's what they do. They just rent because it's cheaper cash flow wise versus paying a mortgage. So go out there, look at rent vesting because it is a really solid strategy. It opens up a massive amount of opportunities. If your income isn't super, super high and you can't afford to purchase where you live, don't let that discourage you and not take action. It's really a matter of, as an investor or just wanting to build wealth in general, finding solution to get into the market sooner and to get that capital growth, because it will reward you long term. All right. So, like I said, for me, I would have been priced out of my market for years to come. I went in, I paid lender's mortgage insurance. I went in with a really low deposit, got into that area, lower price point, got that capital growth, snowballed. I was able to use that capital growth for another property and another property and another property. And it just has built up over time. And this is why I always bang on that the purchase you make today is going to set you up for the future purchase. So don't cut corners, and make sure you're just finding that solution. All right. This one's a pretty short one today, but just, really touching on some of those strategies to get in the market sooner with Rentvesting and why it's a really solid strategy. Thanks for listening, guys. I hope you enjoyed, and we will see you on the next episode. Have a good one. Bye. Thank you for listening to this episode of the podcast. If you don't already, make sure you follow us across all of our social platforms. That can be Instagram, YouTube, LinkedIn, Facebook. I wish you all the best out there on your property investing journey, and I hope each decision you make in purchasing more property gets you closer to your goal of financial freedom.